Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me today, we have Shawn Cruz. He's the manager of trader services at TD Ameritrade. And Shawn, it's another day of green in the market, certainly erasing the 1800 down day in the Dow that we had earlier, right? And it seems to be that stocks are just moving full steam ahead.
Yeah, I think last week, all of the major indices sort of got jolted off some of those gains that they had made. A lot of that had to do with what we were hearing out of the Federal Reserve. But if you still look at one making up most of that ground this week, especially after what we've been seeing today, but just in general, it hasn't really changed the narrative in terms of relative performance. And we still see the Nasdaq 100 continue to outperform all the other major indices by a pretty wide margin, outperforming the S&P 500 by 16%, outperforming the Dow by 20%, and then outperforming the Russell by about 24%. So still a lot of the strength appears to be coming from those tech and communication services type of companies.
And if you take a look at our second chart here, Shawn, pretty interesting that Oracle will be reporting after the close today. It's a big name for what's really considered the slower part of the earnings season.
It is, and one thing that Oracle is going to be very interesting to watch is one is analysts are looking for earnings per share to be flat. They're also watching for a slight drop in the revenue, I should say. Nothing I think too catastrophic, but I think really what is going to be interesting is what we hear from management and how they forecast. So I'm looking for indications that Oracle may actually benefit from companies who have sort of gotten the reality check that they need to put a lot of money, a lot of investment back into their business on the technology front. And Oracle, we've talked a lot about cloud. We've talked a lot about that benefits for a lot of the semiconductors and maybe some of the productivity companies like Microsoft. But Oracle has a significant role in a lot of this infrastructure that needs to go into place if these companies technology capabilities. So I think it's going to be very interesting to see if that's a trend that they benefit from as we recover from this. Looking at what is being priced in, though, it looks like the option market's pricing in a 5% range on either side, up or down, for Oracle to trade in between after earnings, which is interesting because for some of these companies out there, we've seen that expected range to actually be 10% of where the stock is trading going into earnings. So not as much, I think, volatility expected post earnings. And if you think about where a lot of that volume's been so far this year, the peak is right around that $53 level. They're trading slightly above that. So it'll be interesting to see if it stays anchored to that high volume level, or if we do get a decent size move. But one thing that was interesting, Jill, and I know you as an options guru yourself, you're actually seeing implied volatility pull back just a little bit going into earnings, not seeing that big spike or that big rise in implied volatility. So I think that is one thing that's also interesting to note here for Oracle.
All right, and if we look at your final chart here, the different sectors and how they're performing, of course, we see energy leading the way as it did last week. Doesn't look as if there's much difference in terms of the composure of leadership, though.
Yeah, one thing that is interesting is if you're just looking at the percent changes, it does look like the cyclicals are doing fairly well today. We've gotten some data that maybe points to a decent recovery in the works for the economy right now, and that's just looking at some of the ISM data that we had last week, looking at the retail sales data we got, where furniture and home furniture stores are up 90%, clothing accessories up 188%, in sporting goods and hobby type stores up 88% over last month. So that's important because the big unknown in this recovery is what is the consumer appetite to actually get back out and make purchases and be active and participate in economic activity going to be. And we got some pretty good indications today that as much as the reopenings are and the restrictions are being eased, it looks like there is some pent up demand from the consumers. And we also got some housing data out this morning where there's subcomponents from that headline number. And what they put out was that they're actually seeing a pretty significant rise just in potential buyer foot traffic, showing that as you started to ease restrictions, people were getting out there, taking advantage of these low rates, actually going out and making trips to houses to see. And just so the magnitude, the reading on that went from 21 up to 43 just in the span of 1 month. And in the mid 40s, the mid upper 40s is sort of where the usual level for that potential buyer foot traffic number is. So it does look like the consumer is ready to come back. So now it's just a matter of how do these reopenings go? Are we able to do this without a spike in hospitalizations and even worse yet fatalities? I think if you can see that have a smooth, and if you look at it, if you don't just look at the percent changes, if we look at the historical volatility over the past month, you definitely see these cyclical type companies really lead the way in terms of the most volatility. Energy 62%, financials 51, industrial 43, and then the real estate up there at 39, and the materials at 37. So it definitely looks like the bulk of the volatility has been from those cyclical, I call them the economy sort of reopening type of sectors. If we're going to see a sustained rally and some strength and some stability in being able to keep the gains we've had that I think have been driven by more breadth in terms of the sectors participating, I think the reopenings continuing to go well are going to be key. And then there's also going to be some of the fiscal and monetary activity to note. I think also the cyclicals are getting a little bit of a boost from a potential infrastructure bill as well. So there's a lot going on here, but I think seeing the cyclicals sort of starting to catch up is a good sign just in general for the breadth of the equity market.
And Shawn, one last question before we go here. Even though we see a sea of green out there, the VIX and also the VXN, the volatility index on the Nasdaq, is elevated, and typically you don't see them rising in tandem with each other.
That is one thing that I think is interesting. And so I think that means to me in my read through, and that was actually one of the first things I looked at, Joe. Because if you think about it, last week we got down to the mid 20s for the VIX, which was showing there wasn't much expectation for a lot of volatility or back and forth movements in the future, or at least over the next 30 days. That has sort of risen back up to that mid to low 30 level. And that's even as we're starting to get some incredibly strong days. So what that means to me is that there's optimism out there, but it's cautious optimism. And I think that is the narrative that's driving all this upside in equities could quickly come undone. If, like we said, the reopenings don't go smoothly and maybe restrictions have to be put back in place, or at least the reopenings have to be paused for a little bit. Or if maybe we don't like what we hear from any sort of potential stimulus out of the government on the fiscal side, because they are moving away from these support packages, which is money directly in the pockets of individuals, and sort of in these more large infrastructure type projects. So it'll be interesting to see how the market digests that and if they like it. But this is telling you that they're optimistic from what we're hearing, but that whole story could sort of reverse itself pretty quickly if things start to fall apart.
All right, Shawn, thanks so much as always for joining me on Trade Talks.
Have a good one.
All right, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.